I am extremely pleased we're starting out the afternoon with a panel of people that I actually happen to know, all of them, and the reason, I guess, why they're here with us today. But I think it's going to be a very engaging conversation as to kind of the state of where investing is right now from their perspective and fundraising from a startup's perspective, and that'll be kind of the topic. But I don't want to waste any time. I want to introduce my good friend Michael Lerma. I met Michael right when I moved here 4 years ago, became friends, knows the sector well, and I'm going to, he's the founder of Wealth Capital Network. He can say a few words about what he does, and then he'll introduce the panelists. We'll go from there. But thank you.
All right, thank you. Well, it's good to see everybody here. I know you're nice and full, and we'll try to do our best to keep you uplifted. Again, I want to thank Jerry, and obviously I want to thank Ashish and obviously the whole TiE family, Anshuman, for having us up here. So first and foremost, I think we should just give them a round of applause. It's always an outstanding event. Every year, it just seems to grow and grow and grow. So it's really a compliment to you guys and the whole TiE executive director team, of course, Jerry as well. Just to give you a little bit of a snapshot, because we really want to focus on them probably more than me. Wealth Capital Network, we are a global investor ecosystem. We work with professional athletes, we work with family offices, both in the US and globally, as well as high net worth individuals. We also feature global investor summits. We just featured one in Dubai 2 weeks ago, so we just got back from that. And the idea behind our business, one of the focuses is bringing family offices together along with professional athletes to look at different investment opportunities. Typically, they're off-market investment opportunities that might exist here in the US, but also in the UAE region. We're also focused on capital introduction. That's a big part of our process. So we'll bring some companies over to the UAE to introduce them to some of the investors that we have, more so on the family office side. And then we do some business advisory as well. So that's kind of the 30,000-foot overview. I'd be happy to talk to you more about it after we conclude. But let me get to our panel, because this is the real meat and potatoes. We have Xandra Laskowski, Janice Orlando, Garrett Gilbertson right here, and Azad Virk on the end. Just to give you a little bit, I'll introduce Xandra. I'm going to let you guys introduce yourselves, obviously, but why don't we start with you, Xandra, since I have you first on the list. She is the CEO and founder of OSEA Angels, and I've known Xandra for a few years as well, so it's always good to see you as well. Go ahead.
Nice to see you, Michael, and nice meeting all my panelists. This is great. I'm founder and CEO of OSEA Angel Investors, but before that, I started my family office in 2008, so I've been running that for a while. And I started OC because there wasn't a women's angel investment group in Orange County or Los Angeles in 2017. I was shocked. I mean, there's great angel groups, but nothing that was really teaching women how to be angels. I have over 46 companies in my own personal portfolio, and glad to be here. Always looking for new ones.
Okay, thank you. Also, Xandra is one of the, when it comes to, is it deep sea diving and all those?
Yes.
That's
Scuba
a whole
diving.
nother level. Yeah, scuba diving and the whole nine. It's a pretty amazing story. Let's go to, let's see. Janice, right next to me. Janice Orlando. She's with Pasadena Angels and the co-founder of Venture 12. Janice, just give us a snapshot of your business and who you are.
Sure, I'd be happy to. Thanks. Yeah, Pasadena Angels is one of the largest and been around longest in the country, angel groups, and so we have a wealth of great investors with long time experience. It's been very fun, and so we do probably about maybe 18 or 20 deals a year. We have a large portfolio of companies, about I think 800 right now, a fair amount, and do a lot of follow-on funding. So we're a great strategic investor when you start and are looking for good investors that will follow you through your next steps. So that's that organization, which is amazing. And we're very closely tied with the Tech Coast Angel Group now, which is very fun because we share due diligence, and it's been great because we syndicate a lot of deals with them anyway across the board. I have a family office. I've been doing early stage investing for many years, and we have about 150 companies in our portfolio, and we like follow-on investing as well. I love early stage companies, and so it's great to be here and meet some of you. Thanks for your pitches.
Awesome, thank you. And then Garrett Gilbertson. Garrett is the founder and managing partner of Some or SUM Ventures, and he's also the chair of Band of Angels LA. Known Garrett for a little while as now. So Garrett, give us a little bit of background on what you guys do.
Hey, thanks a lot, Michael. It's great to be with all of you today. My background quickly, I was just a former Air Force officer who got stationed out here in LA. As I was getting out of the Air Force, I launched my first company, and I would say I did not have the retire on the beach exit, but I made enough to start investing. I went and ran a family office and then a corporate venture fund. And a few years ago, had the opportunity, I joined the Band of Angels, and it's the oldest angel investment group in Northern California, if you haven't heard of it, and also a member of Pasadena Angels. And after joining the band, I looked around and I realized I was the youngest guy in the room, and I figured, well, what I lack in experience, I better make up for and hustle. So I started running around town, hosting various pitch events and getting deal flow together. I think you heard from the CEO of Boreas. It's one of our early investments. And I started bringing those companies up to the band and started hosting a monthly meeting. And sure enough, after a number of years of doing it and building out a portfolio, I looked back and said, oh, we got to turn 30% IRR, and maybe it's about time to raise a fund. So last year, we hit a first close for our venture fund. To date, we've made 12 investments in the 250 to 500K range. We do a lot in fintech and prop tech, but I think what really makes us unique as a fund is the fact that we start tracking founders very early in their journey. And that doesn't mean we put big money into founders early. I think you might have heard from a founder earlier today who raised $4 million in 6 months. That's kind of the opposite of our model. We'll phase into a position. We really want to take the time getting to know that founding team and doing the diligence, but we'll add value along the way. And so when the larger investors come into the round, our fund's sitting alongside to them because that founder remembers, you know what, the guys over at Sum, they were really helpful to us in our journey. So I think that's hopefully enough about me. I'm happy to be here.
No, that was good. That's good. And I'll get to Azad in just a moment, but one of the ideas behind putting this panel together was because we recognized in the room we have a variety of different types. We have investors, we have founders who are doing startups, we have some VC funds, so we thought by having a diverse panel we'd be able to address some of those questions you might have and also just to give you some deeper insight. Azad Virk. Last but certainly not least, he is a corporate attorney at Stradling Yocca Carlson and Rauth, I think, and he's also an angel investor and one of the key sponsors of this event. So Azad.
Thanks, Michael. So I'm a shareholder at Stradling Yocca Carlson and Rauth. Stradling is a corporate law firm based in Southern California. Like any West Coast law firm, we work very closely with startups and emerging growth companies. They are a key part of our legal practice. We start working with entrepreneurs, founders trying to start working with entrepreneurs at a fairly early stage, take them right from inception, take them through various rounds of financings, and hopefully have an exit. We treat founders as our partners. We, as if the founders, the companies, they do well, so do we. And as I said, I'm a shareholder in the corporate and securities practice group. My key area of my practice is emerging growth companies. I'm agnostic as to technologies. I have clients from med device from life sciences, med device to e-bikes to software and hardware semiconductor companies. But we have folks that that have specializations in various verticals, and so if need be, we can bring in the expertise from those verticals to help out on terms that are material to a particular deal.
Awesome, thank you. All right, let's dive into this. Now, this is a subject that we could probably talk about for an hour, but we're going to try to keep this not to an hour, right? We only have a little bit of time left. But let me start with the first question. Now, obviously, we all know about the SVB situation, but and I'll start with maybe you, Xandra, just to touch on this. Given the event involving SVB, obviously, how is this going to impact your approach to investing, both individually and as an angel group in the months ahead?
Yeah, that was a blow to our industry because SVB was an integral part of a startup that scaled. They were offering unique solutions where no other bank right now is doing that in the world. So, angels, VCs are taking a pause, but we also want to keep investing. Our investment thesis will not change. We're very tight. We have 7-point criteria companies need to meet before we even look at them. We look at late stage seed and bridge to A rounds. And we've said no to a lot of deals in 2021 and 2022. Well, 2021 was when the height, we'd see a lot of valuations, it just made no sense. And so we said no to many deals. But with that, we funded, it was the biggest year we funded was 2021. We funded a lot of deals. 2022, not so much, because we saw the headwinds coming. We knew recession was coming, inflation was already up. So we basically did triage with our portfolio companies that we were already invested in. And then, by May, June, everyone was getting quiet. And my syndication partners were looking at me and they're like, Xandra, what deals are you looking at? And I go, it's really tough to find one that fits our criteria. But with that said, we did our survey this year, and our members still want to invest. They have the appetite. We know that the innovation that's going to come out right now is going to be incredible. We're going to look back in 2 or 3 years and see these amazing companies, and we have a few that we're circling to look at in May. We only meet 5 times a year, my group, and we only look at 10 deals a year. So it's the pace of deal flow, because a lot of my members also have their own funds, and they're part of other angels. So we keep it laser focused, and we're industry agnostic.
Excellent. Good idea. Let me ask you, Janice, what's your thought on that?
So yeah, I think I have looked at things a little bit differently. We had a very quick triage with all of our companies, or most of them, and I think even more important now than before, we always preach to have a CFO, fractional, someone in your field that really understands where the money is, how it's being used, and how you access it. And this, of course, highlighted that at a huge number. So I think that's even a bigger and more important question that I'm personally asking when we're talking to new founders, and also the whole conversation around cash. Cash is king, and you have cash in the bank, and maybe you have it, maybe you don't. Maybe you have part of it, maybe you don't have part of it. And so what is your mitigation plan around cash, and how far ahead should you be? We have companies coming to us with small raises, and sometimes it's like, you know what, maybe it's a good time to do a little bit bigger. Why don't you double that amount, because you just don't know. This is a tenuous time for the industry and for the market, and so everybody needs to be pretty conservative in the next 12, 18 months, or whatever it is. So we're very conscious, and I'll say one other thing about that, is I'm looking a lot closer at the advisory group. So if you're a startup company and don't have a big team, get great advisors in your team. And so I'm taking a lot more and talking to those advisors, and how much are they involved, and what is their market experience, and how much are they coaching these startup companies. So it's a great way of having really quality people on your team, and they're not on your team. And so I'm looking much closer at the advisory group than I was before, just because there's so many variables happening in the industry.
Yeah, advisory group and the management team as well. What about you, Garrett? What's your thoughts on that?
Well, I agree with a lot of what was shared. I would say the 2 actionable steps I would advise founders are there are a couple companies. One's, and neither of these are portfolio companies, although I will shamelessly plug my portfolio later, I'm sure. The Max My Interest and Treasure. There are 2 companies that specializes in helping early stage companies and individuals diversify their funds across a number of different accounts. And a lot of our portfolio companies were already working with them, so SVB wasn't as big of an issue, although we did have a couple that recently closed Series A, and I got that panic call on Thursday, so that was, obviously, we had to have a little bit of a team therapy session heading into the weekend, but everybody survived, and we're looking all right. But I would, again, if you're a founder, I'd say check out those 2 platforms to help you manage your cash flow.
Yeah, I was thinking about that when just a couple weeks ago we were in Dubai at our investor conference, and we were talking to some of the startups, and we were suggesting that for founders that are startup companies, start looking outside the U.S. To make investments. Don't be locked in just to the United States. There are a lot of family offices that are doing global investments. We see a lot of them at our events in Dubai and Abu Dhabi, in Africa right now. Africa, as you know, some of the heads of states are in Washington, D.C. I think they were there yesterday. Africa's becoming a big target now for investing. China's already there, right? So these are areas that you want to just sort of explore outside of your comfort zone, by looking at different ways and different families and other investors outside of your typical ecosystem. And I think you touched on it, Janice, about capital efficiency. That's very important right now, given this climate. Let me ask the next question. What might be some of the advice you could give or offer some of the startups here in attendance? I know we kind of touched on a little bit. Azad, do you have any thoughts on that?
with respect to SVB?
No, just in general, what are some of the comments as an investor you could give to some of the startups?
Yeah, so, as Xandra said, 2021 was a great year for startups. The valuations were sky high. And not only the valuations, the checks that that the investors were writing were also pretty substantial. So a lot of those startups that raised money in 21, if they are back in the market trying to raise capital this year, 23, I think will end up, may end up having some down rounds. I think my advice is that it's getting tougher to raise capital. The liquidity is tightening. I think one needs to, two things one needs to do. One, when you're raising capital today, you need to keep in mind that where is the next money coming from? What is it going to look like? So if you're overvaluing your company, then it becomes difficult to raise money in the next round. And on the other hand, if you're giving too much to your investors, too much investor protections you're giving, then it comes back to bite you because the next round investors are going to only ask for more. So you need to balance those two things where your valuations need to make sense from where you are today and where the next money is coming from. And on the other hand, what investor protections are you willing to give so that they don't. The next round doesn't become that much more burdensome on the founders or the management team.
Yeah, good point. Xandra, your thoughts on that?
Don't
Advice.
chase the investors right now. I know that's what we don't want to hear, but really, if you have customers, hone in on them. Are they in a sector that's going to survive? Are they going to re-up? What's the retention look like there? Work on your metrics. Take care of that customer. It's just simple as going in and seeing what's working, what's not working, and then can I get an introduction to possibly another customer? Customer-centric, because if you don't have that customer, you fail. So when that's happening, when you have the metrics, when you have repeatable demand, that's when investors will find out because you're going to be making a mark in your sector or whatever what you're building. So that's one aspect of it, and of course, understand your numbers. Founders that don't know their numbers and they say, I don't want to know my numbers, that's just crazy because you need to look at what's in the bank right now. You're fundraising, you're in revenue. How is that going to, what is my runway with that? Because capital right now is really tight. With that said, we're still writing checks. I know it's confusing. So focus on that customer and really make sure that the existing ones are going to stay and that you have horizon on the new ones.
Okay, Garrett.
Yes, so build upon a little bit of that. I would, I guess, disagree with one piece, which is that it's not the if you build it, they will come mentality for a founder and we'll find you in your sector. Yes, that's partially true, but as a founder, it's your job to constantly be fundraising. And it's not your time like 2-3 months out to say, okay, now I need to kick off a raise. It's your job to start cultivating that pool of potential investors every single day and to communicate with those investors on a monthly basis. And then when you need the capital, those investors, you'll have built a relationship with them over a period of time. So one of the things that I have with the early stage founder that I'm interested in is I will say, here's a great investor template. Send me a monthly update and keep me posted on your progress. And I will watch and I will pay attention over a period of 6 months, in some cases a year, some cases even longer. And I will track that progress and I will see their consistency. And then I'll be more inclined when they come and they need capital. I think the know your numbers piece is absolutely critical. I can't tell you how many founders get up in front of us and they are just not able to speak to their margins, not able to speak to their burn rate. And frequent question I'll say is, what are the 3 or 4 KPIs that drive your business? And if you can't just hit that right away, then it's almost a non-starter for us.
Yeah, those are really good points. And I want to end with you on that question, Janice.
Yeah,
what are your thoughts?
A quick question on that. So I've made a big diversion recently and even circle back to our founders after the SVB issue, and that's around AI. And I think every founder, every company should have a chief AI officer. And if you don't have one, you need to make one up and find somebody who understands it. Because if you're not investing in AI right now, I don't care what industry you're in, you're going to be behind. It's my personal opinion. I think it's huge. And with the GPT-4, we all know all the hype around it, but it's legit and it's going to integrate in every industry, every vertical. And so I'm like asking every founder to actually tell me what the future is and how it's going to affect their industry. And nobody talks to us unless they have at least a semblance of idea how it might affect their business and what it means to them. So that's a big change in the recent, month for me as well.
Yeah, I want to add to that just quickly. One of the things that I never see in a pitch deck is what is the investor relations plan? How do you communicate with investors once they write the check? It's never in there. And that's one of the most important things. We've all heard of horror stories where angels have made investments and others have made investments and there's no communication. So it's really important that you have an investor relations plan as a startup so investors understand how you're going to communicate with them. Is it going to be a portal? Is it going to be quarterly, monthly? So you don't have to get those phone calls from the investors. If you have it in place, you shouldn't have to get phone calls from investors. Just want to throw that in. Now, Azad, this is a question specific to you because you have the legal mind on the panel. Given the recent impacts, what's been the legal, or what is the legal approach in investing in fundraising? What might be the legal approach now, given some of the things that have taken place?
Yeah, so, we are seeing the regulatory system changing as well. The SEC is proposing regulations which are going to, bring some accountability and transparency on the fund side. The LPs will have, they'll be the GPs will be required to share more information. They'll be more accountable to their LPs. So that's what's happening from the regulatory side. From the investor to the company side, I think apart from, of course, the valuations coming down and everything else, I think the investors are becoming, not that they don't already have, but they are tending, we are seeing that they are more, they're using those rights, like the board seats that they have, or the vetoes that they have at the board level, or the vetoes that they have at the stockholder level. They are trying to assert them more, and they will as they, as they want to make sure that the funds that they've invested, that the management is using those funds as per the plans that they submitted to the investors. The investors, once the money is in, the investors are on the same side as the founders, as the management. They want the company to be successful, but at the same time, they don't want the founders to go out and splurge the cash just because they've raised the money to go out and start hiring a bunch of people which they may not need right away. So we are seeing that the investors are becoming more assertive at the board level, as well as at the stockholder level.
Oh, awesome. Okay. Boy, time is moving fast. It seems like it moves faster when you're sitting up here than when you're sitting out there. I'm looking at this clock. I'm going, whoa. And Ashish was looking at me like, So let me ask this question. Okay, good. What are some of the verticals and opportunities, and I'll just go right down the list, starting with you, Xandra. What are some of the verticals and opportunities that you feel will be important to keep an eye out on in the next maybe coming months that you see on the horizon?
Well, we loved biotech and media, e-commerce. In tough times, back in 2008 and the recessions before, people are going to still spend. They may spend less, but they're still going to spend, and they like to purchase online. They want to get their voice out there. We don't know what's going to happen with TikTok. So e-commerce, any ecosystem that's going to feed into that market is interesting to us. Biotech, company we're looking at right now is pretty incredible. It's in a sector that's near and dear to me, garnering data and helping providers really take it to the next level. So clean tech, ag tech, all of that is of interest to us. These are technologies and solutions that we're going to need moving forward no matter what. Yeah. If we're in a recession, we're not in a recession, and they're really compelling. So that's just a few, but we're industry agnostic.
Okay. And Garrett?
I guess the better share where we put our money here recently, and if you read TechCrunch, you probably saw that there was an announcement recently. Green closed a Series A. That's a clean tech company, a smart sprinkler system. 50% of saved water. It's again just speaks to sort of our thesis, and that made an early investment a few years ago. Started tracking that company for a couple of years, and at that inflection point, we participated in a larger capacity alongside Ulu Ventures. So clean tech's an area of interest. I'd say champions around. We saw I think a sports betting platform. Really excited about that space in general. Steve Cohen just followed our investment in Champions Round, led their Series A. I think there's some exciting developments that are going to happen, and looks like there's some other neat companies presenting today on the space. DressX, actually sort of hybrid, clean tech in a way, but really digital fashion was the space. And that was a space I never thought I'd be that interested in. But Mark Zuckerberg was just on stage the other day talking about one of our portfolio companies and their integration within Instagram and the way in which we are consuming fashion both in the real world, in virtual reality, and in augmented reality. So, I mean, I think we have a wide variety of interests, but a part of what gets me excited is when I see strong customer traction, see really deeply passionate founders, and then see obviously smart, strategic later stage investors coming to the table sometimes a little bit earlier than they would tend to because they don't want to miss on an opportunity. And that's what we like.
That's a good overview. And Janice, what about you?
Yeah, real quickly, let's see, the last couple investments, also industry agnostic, really just like really smart founders that do what they say they're going to do. And so Last Companies is a very cool company, I think Garrett knows them, Open Sesame, and they've resolved a really serious problem with latency in media, and a very smart tech company. I've been following them. This is my third investment with them. Started when they were just had a really good idea because I like those guys, and which is different than what I just said I would do, but sometimes we do. And so that's one. We're along the path on that. And the other one is a security business. They have it's a veteran company, Haven Lock, and they have a great product where they can secure schools, government buildings, military facilities, and so they've really moved into that on a high-tech way, and so that's a great solution. So I'm looking for companies that solve real problems, not problems that you have to sell the problem to get the solution. So that's the biggest thing, is it a real problem to solve, and are you using technology to solve it at some stage?
Well, that's a perfect segue to my next question. I want to start with Azad. So what do you look for in a company for it to be investable, Azad? Let's start with you. What are some of the areas that you focus on?
I would say the founding team is very important, and as was said earlier, the advisors. If you're a first-time founder, entrepreneur, then you need to have advisors around you that bring value to the table. And I've worked with a lot of founders and entrepreneurs. Your advisors are not supposed to be people that connect you with the capital or that promise you to bring you the capital. Your advisors are people that will advise you to grow your business, to take it from point A to point B, so that the investors are willing to write you the check. And you need to have advisors around yourself. If you're a first-time entrepreneur, you need to have advisors around yourself that can help you do that. And I would generally advise that if there's an advisor who promises to bring you capital, you should stay away from such an advisor.
Okay, thank you. Xandra?
What was the question again? I was so engrossed.
What do you look for in a company? No, that's fine. What do you look for in a company for it to be investable from your perspective?
Besides the founders having passion, because you can't buy that, I call it the PMP when I talk to entrepreneurs and people that are looking to raise money. The problem you're solving, the market size, the people doing it. Those are the three things that have to come across to me to get me interested and be compelled. Understanding your metrics, understanding really the capital it's going to take to get from point A to point B, and then really looking at the exit. Yep. But really it's the PMP. It's going to come across to me very quickly to see where the opportunity is, the problem you're solving, and who's pounding on the door to have this.
Absolutely. Garrett?
I think that was all really great feedback for founders. I'll just take because I was going to say a lot of that, I'll take a slightly different stance and say, here's a few don't do's, right? Don't come to an angel group right now with a pre-money safe. Don't do it. It's not going to get done, okay? Don't come to an angel group with a slide filled with advisors that you haven't spoken with in months. Don't do it. We're going to call, okay? Don't come to an angel group as a pre-revenue startup in the and have a tens of millions of dollar valuation. It's just not going to get done. Do come to an angel group and have one or two or hopefully a few of those members champion your deal. While I agree that you don't want to have an advisor who's just on your cap table or an advisor to help you raise money, you do want to have an advisor who has early skin in the game and is going to champion you within a group. Very few deals get done anymore within angel groups where there isn't that deal champion behind the scenes. So it is really important to take that time. Do, as an early stage company, speak with later stage investors and understand what metrics they're looking for before they will become actively involved in your round. And make sure that your investors, when you're up there presenting, understand that you know what it takes to not run out of money down the road. You understand what milestone you need to accomplish in order to trigger that additional investment. Those are the types of founders who have been around the block, who understand what needs to accomplish, and I'm getting long-winded, so I'll stop there.
No, actually, I was going to say some things, but you took most of the things I was going to say, so I don't have to say much now. Janice, what are your thoughts?
I don't have a lot more to say because I think the technology and actually building into the future, even if it's not your current model, how are you going to utilize it? Because everything's going to be disrupted very soon. So how are you going to respond to that, and what do you think about it? And knowing that you're thinking about that and actually creating monetization around it is really important to me.
Yeah, and I'll say this. This is particularly to the startups. I know we have about 2 minutes. I remember when I moved from New York to Los Angeles, I started film financing. I really knew nobody in Hollywood. I didn't have a large network at all. But I got out, I networked with a lot of people in Hollywood, built some solid relationships with people who had years of experience in Hollywood, who believed in my vision of what we were doing, and as a result, I was able to bring them on as advisors. And that got me through a lot of investor relationships, raising capital, because they knew who those people were. They didn't know me, but they knew who those people were. So I know what you're thinking, maybe, how do I meet all these people? You have to get out, you have to network, you have to go to certain events, and surround yourself with people who are smarter than you in different areas that you don't have the wisdom and the insight. And that's going to bode well when you start speaking to and presenting to investors. So with the last minute, let me just take a final word on founders and investors. Final thoughts, 30 seconds or less.
Well, I think for founders, you need to know your audience. You need to understand who you're speaking with. You know, as was said, if you're talking to an angel group and you go with the tens of millions of valuation, you're not going to get the money. That's not their sweet spot. For the investors, it's, I mean, they're much smarter than I am. I'm not a full-time investor, so I would just let them answer that.
Okay, Xandra.
Yeah, the PMP. I mean, we're going to be asking these questions, and we're going to look under the hood pretty quickly. So founders, be prepared for, why are you bringing this solution to the market, and know your numbers. And then for investors, I'm giddy. It's a very exciting time. I'm going to be investing this year. I'm looking, at great technologies that are in the future. AI, to your point, it's integral, and it's not so much that it's on your platform. There's so many AI companies out there that can make your life easier, and you can integrate those solutions immediately into your company. So thinking about that AI and making the process and the journey a lot more effective, capital efficiency, that's what we're looking for as investors.
Awesome. And Garrett?
I'd say point of hope for the founders is that great deals are getting funded. And in the past year alone, since hitting our first close of the fund, we've had half of our seed portfolio already raise Series A. And so, if you're out there and you're having meaningful traction, smart investors understand that there's opportunity in crisis, and that's kind of where we are right now. I would say for the investors, I'd like to leave you guys with one thought, especially as an angel and having been an active angel myself, is within our groups collectively, I think we all need to do a better job of disclosing what our interests are in deals. I think there's often times when angels bring a deal forward and it's unclear whether that's angels an advisor, where they have skin in the game, exactly why they're bringing that deal forward and sharing that opportunity. And I think that, for founders and for us investors, that we have to look out for each other, and we have to be also careful a little bit of herd mentality. Because I think if we've learned anything from the past few years, it's sometimes when you get the hot company coming out of Techstars or YC or something, which are great programs, I'm not knocking them, sometimes valuations get a little crazy. And sometimes that herd mentality kicks in, and it's really important to understand it and have a disciplined approach and not necessarily just jump into something because you see 10 other names that you recognize. My best investments personally have been deals where I was one or two, in the room who was nodding along. And it was oftentimes because I knew more about that founder than anyone else in the room. So take that time, and I think it pays off.
Awesome. Janice, you got 30 seconds to close us out.
So I think this is an amazing time to start a business, and I think it's an amazing time to scale a business. So all the negative, whatever it is, you're not going to scale your business and sell it this year anyway. So use this time. There's great resources around, there's great advisors around, and so I think some of the best companies that historically, if you've seen all the posts, have started in down economies, because right now is the perfect time to create your viable product, is actually create it now, get your resources around you, and there's money to be invested. Trust me, there's lots of money right now flowing around to good ideas, to good companies. So get a mindset of productivity, and I think it's a great time to be in the business from both sides.
Awesome. Thank you, panel, for being here. And thank you all for listening to us. And we'll turn it back over to Jerry. Thank you.
Thank you, Michael, so much. I would like to invite some of TiE SoCal board members here to present a momentum. Gaurav, who else is here? Some of them might be outside. So Gaurav, please come. Then Anshuman is here. One of our biggest volunteers, Pankaj Dayal, please come. Come on, please. And anybody else is here? And Mike, our membership chair, please come.